makers and market movers. This is The Pulse with Francine Lacqua.
Well, this morning, Guy Johnson. Good morning. Welcome to The Pulse. I'm Guy Johnson. I'll be taking you through the next hour. The story, of course, is the round trip that we've basically had on tariffs. So President Trump says he will pause his 50% tariff threat on the European Union until the original date, which was July the 9th. This after speaking to Commission President Ursula von der Leyen. The move allows for, of course, more time to negotiate a trade deal between Washington and Brussels.
We had a very nice call, and I agreed to move it. I believe June 9th, it would be July 9th would be the date. That was the date she requested. Could we move it from June 1st to July 9th? And I agreed to do that. And that she said we will rapidly get together and see if we can work something out.
Well, that didn't last long. I'm joined now by Bloomberg's Ollie Crook from Berlin to talk us through all of the action around this story. Ollie, action. I use the word action. There's been a lot of sound of fury, but we haven't really changed anything, have we? We're basically back to where we started.
Yeah, I mean, basically what you've done here, or the Trump administration has done, is basically increase the odds and increase the sort of intensity of if you do hit that deadline of July the 9th. You know, initially this was going to kick 20% tariffs back onto the European Union. That figure is now 50%. But as you say, Guy, we just basically did a round trip Friday to Monday. If you weren't really paying attention, in this morning we say, hey, there's going to be an extension to tariffs, you'd be forgiven for asking what tariffs. So this is basically the Trump administration's play so far. Again, there's been a lot of sound and fury. There's not been a lot of actual material progress in terms of actually imposing these kinds of tariffs. Ursula von der Leyen got on the phone with Donald Trump. Apparently they had a very good, very civil call in which the Trump administration and Donald Trump granted that extension. But again, for the Europeans, this is meant to sort of ratchet up the pressure. Scott Bessent was saying that he was really hoping that this would light the fire underneath the EU. And of course, the Americans have been very intensely frustrated by the negotiations with the EU, because I think that I get the sense that they're going more into the weeds in different partnerships and things that the EU and the U.S. could work on together. And the U.S. just really wants a very big win from the European perspective. And they have not really found a way to basically have that in the discussions that they've had so far. So again, it ratchets up the pressure. If there is no deal by July the 9th, that's 50% tariffs. And we should say, Guy, that is higher than any of the figures that we saw on that liberation board on April the 2nd. No country had hit 50%, not even China. None of the sort of trading partners with the United States managed to hit that level. So it really raises the stakes for the European Union.
The problem with all of this is that, A, the European Union has to negotiate with the Americans. It's also got to negotiate with itself. It never moves quickly. That was the lesson from Brexit. What do we know about the state of play when it comes to negotiations right now? Has anything been agreed? Is there any progress being made? I'm assuming by the fact that we had this announcement Friday, very little. So there's a lot of work to do.
There is a lot of work to do, Guy, and we've seen sort of drafts and bits and pieces here and there, and I can go through some of the things that we've seen in terms of what the Europeans are proposing, but we should just say broadly before getting into those details, this is basically, I think, also a language difference between the U.S. administration and the Europeans. The Europeans really want to have an understanding from the Trump administration what specifically they want, and the Trump administration just wants to get the best offer they can from the EU. So some of the things they've talked about is, enhancing economic security, mutual investments, strategic purchases. They've talked about an EU-US energy partnership on gas, nuclear, and oil. Talked about potential partnerships on, shipbuilding. There has also been discussion about environmental standards. That is actually quite an important one, because for many of the reasons that things cannot get into the European markets are down to environmental rules or food safety rules, those sorts of things. So those are going to be sort of substantial issues. But again, for the Trump administration, they want a big number. They want something that says, hey, this is worth X amount of dollars, $1 trillion. So, for the Europeans, and again, this is very difficult to negotiate at the top European level. As you say, there are 27 member states, and the EU Commission is in charge of just trade. If the Trump administration is concerned with dealing with non-trade barriers, that goes into some domestic policies within the 27 member states individually. That is not something that the EU has the sort of competence to negotiate. Probably what the Trump administration would quite like to see from the EU is, hey, listen, we're willing to buy, $1 trillion worth of natural gas over the next 10 to 20 years. We're willing to buy $500 billion worth of defense equipment. Those are the kinds of things. And those would be sort of very material ways that you could close that trade surplus that the EU has with the United States that's running at about $200 billion a year.
Yeah. You could include services, which would obviously change the narrative as well. But as you say, that would be quite tricky, but big numbers when it comes to what happens on the military and the energy front. Ollie, great stuff. Thank you very much indeed. Oliver Crook joining us out of Berlin. Giulia Culot, Senior Portfolio Manager at Sycomore Asset Management, joins us now to discuss. Giulia, thank you for taking the time to join us today. Look, we've just had more eruptions in the trade story that make it difficult for investors to really know what is happening. What is your perspective on this? How should investors be viewing the current landscape they see in front of them? So much volatility coming out of the White House. What do? Do you wait for stability, or do you invest now and make decisions now?
Yeah, Aga, thank you for having me with you today. So I'll start really with a quote from Errol Edimson saying, "More things can happen than will happen." And I feel like it has never been truer than today. As portfolio managers, we are really confronted with a range of possible outcomes, which is quite wide. So building a base scenario is not really an easy task to do. So you asked me how do we do it? So it's really down to discipline. We are stock pickers in Sycomore Asset Management, so we are really focused on intrinsic valuation of companies, and this kind of volatility indeed creates opportunities. Then fair to say that what we have been living over the past month and a half is a bit surprising in terms of the speed at which markets have been recovering. And with insight is always easy to give an explanation, but clearly the market decided to take an half full approach in respect to the escalation. And fair to say that hard data are so far quite resilient. And since COVID, we understood that focusing too much on soft data and surveys is at risk of lacking then a confirmation from the hard data. So where are we today? In Europe, we are back to a valuation of 14 and a half times earnings, which looks a bit full and maybe dismissive of some of the risk that we are discussing today. So clearly, the risk reward is a bit less attractive in the short term. But looking more towards the midterm, I have to be transparent. We clearly have a big discussion in the team about to what extent this range bound of European equity valuation is fair to have as a guide in respect to a much more expensive equity market that lacks a bit of catalyst as well.
So what are you doing in terms of the metrics by which you're choosing stocks right now? Are you changing them? What metrics are you using them? I'm hearing a lot of people talk now increasing about factors that reduce volatility. Is that the way you're looking at this market? Are you looking at min-vol strategies? How are you taking some of the risk out of the market? Diversification is a strategy, but the market is so wild at the moment that even that is a struggle.
I mean, it's a wide market, as you said. And I have to say, again, we have really a background of stock picking asset management companies. So this is how we do it. And we do it through discounted cash flow. So really intrinsic valuation. So this is a midterm perspective, which again profits of this kind of volatility because it does not change massively from one day to the another. Then again, fair to say that these markets are much more about positioning. And we see some hiding places in the market that are sort of going against what would be a fundamental value for companies, and it's down to discipline for us. So to have a balanced portfolio, some areas of the market, the more cyclical ones, are clearly not in favor, but have a risk reward in terms of positioning and valuation that seems a bit more attractive today.
Do you get using DCF, do you get how wide a range of companies do you end up within the portfolio? How diversified can you be using that as a strategy?
So in my fund, let's take it as an example, we have around 40 stocks. I have a balanced sector exposure today. And again, I think that it's very risky, and we saw it. I mean, after Liberation Day, one could have gone fully defensive, fully low risk, and take the rebound, which was very much cyclical and beta-driven over the past 5 weeks, very negative. So I think, again, for Europe, there are some themes that are building in terms of higher European exposure, some fiscal investments. So there is a pocket of the market that has some more visibility for the part of the market that is a bit less visible today, I think is really down to having a long-term perspective and taking, again, as well, positioning into account, because that is playing an increasingly big role in these market swings.
What themes do you see building?
I mean, as far as, again, I think there is a big debate in market on US exceptionalism. Is it over? To what extent there is a story building for Europe? We are not really betting against US exceptionalism. Just to take it in context, the 400 points 400 outperformance of US versus European equity markets over the past 15 years is 3/4 down to better earnings performance. So I think it will be down to that what US market will keep on doing. But on the European side, what we say is basically the market, again, is not absolutely cheap in respect to its history. It's clearly much cheaper in respect to the US market. Positioning is very low. As a reminder, we went from being 35% of global equity indexes to 15% today. And we saw some inflows coming in Europe to the tune of 40 billion year to date, still 250 billion down compared to February 2022. So again, we take into account positioning, valuation. And the last point you ask is, why is Europe getting more attractive today in the eyes of investors? And this is really down to the announcements that we have had in Europe on the fiscal side in Germany and on Rearm Europe, which, again, are 2 points. I mean, in aggregate, Morgan Stanley recently estimates that they will add to 40 bips contribution to GDP to 2026. They were forecasting 40 bips consolidation on the fiscal deficit side. So it's clearly a real boost to the perspective of old continent growth. But more than that, I think what we are looking at is really the change in approach from Europe. This big wake-up call that has been done by the announcements and the decision of Donald Trump, which are back to what has been discussed end of last year. So the Mario Draghi report and then the just do something to the European Parliament. I think we are really in this scenario, savings and investment union coming in the next quarter. So there is a good optionality in Europe that, again, is not very expensive to pay off and for which there is still a relatively high degree of skepticism in the investment communities.
Giulia, final quick question. When you look at companies at the moment and you think about where they earn their money, how many European companies have significant exposure in the United States when it comes to earnings? And how big a factor would a euro dollar at, say, 120 be to those earnings? Because I'm seeing a lot of people talking about the fact that you are going to benefit in Europe because of what is happening with the currency, that it's going to make European assets more attractive to US investors and US assets less attractive to European investors. But when you look and you break down your company's revenue story, how much of that revenue comes from the United States? And will these two net each other out, i.e. the revenue goes down because the euro goes up?
Yes, I think, Guy, the US exposure is twofold if you want. So it's around 20% of sales for Eurozone equity indexes or MSCI Europe is very comparable. And first step, I would say, is the tariff one, because you just discussed, will it be 10, 20, 50, probably 50? No. But we still have some uncertainty on the final tariff level. On that one, worth remembering that out of the 20% exposure, just 5% is sales in US done with exports, so with imports in the country. So the exposure is relatively limited. What we are hearing from companies in the meetings we do with them is that this level is relatively manageable. And one should not forget that we are coming from years of inflation, so companies we're not used to have pricing historically, and now the tools, let's say, to manage pricing upward are there. So we felt that companies are relatively comfortable in respect to the net exposure and the opportunity to price up if necessary. So this is the tariff part. On the exchange rate part, I mean, there are many studies showing that indeed you have a negative EPS revision, but that then you have this counterbalancing effect, as you said, of flows into the region for diversification. So overall, then in terms of single stocks, we have some companies for which it's a real negative because it's a transaction effect. So they're really exposed at a profitability level to that. There are a few of them. fair to say that large listed companies in Europe tend to have quite a balanced exposure, so it's more of a translation than a transactional impact.
Great stuff, Giulia. Really interesting point to finish on. Thank you very much indeed. Giulia Culot, Senior Portfolio Manager, joining us from Sycomore, I'll get that out, Asset Management. Thank you very much. Coming up, President Trump shows signs of frustration with Russia's Vladimir Putin. This after Russia launches new offensive strikes against Ukraine. We'll talk about that next. This is Bloomberg. So, President Trump says he's considering new sanctions against Russia. This after Moscow launched a second night of deadly missile and drone strikes across Ukraine. Trump's comments come as he appears to grow frustrated with Russian President Vladimir Putin, with ceasefire efforts certainly losing momentum.
He's killing a lot of people. I don't know what's wrong with him. What the hell happened to him, right? He's killing a lot of people. I'm not happy about that.
Let's get more from Bloomberg's EMEA News Director, Ros Matheson. Ros, talk to us about what these latest comments signal. We've already started to see maybe the US administration beginning to hint at a change of tactics when it comes to Russia. Is that what we are now seeing final confirmation of with those comments from the president?
Well, it's really unclear if that's where it's going to lead, because Donald Trump has been talking about and threatening sanctions against Russia for months now, saying if this war doesn't come to an end soon. There's been several episodes where Vladimir Putin has stepped up his attacks on Ukraine at what's been an inopportune moment for the US in pushing for talks. And as you say, a real strong sense of frustration there. But would he go so far as to put new sanctions on Russia? I mean, his own Secretary of State, Marco Rubio, recently said that maybe sanctions could be counterproductive. That could lead Vladimir Putin to walk away entirely. And is that the best approach? So clearly there's a conversation that's going on in the US administration now about what to do next. But obviously they're trying to get Ukraine and Russia to the table. There's still no set date for those direct talks to happen, location, the level of those talks. Are they ministerial? Are they something else? And what are those talks going to achieve? You know, Russia has said it's going to present a list of its demands to Ukraine. That list has not come. So the sense from the US and elsewhere is that Vladimir Putin is very clearly dragging the chain here on getting to talks. Meanwhile, even though he is agreeing to prisoner swaps, he's not actually stopping the fighting. So you're seeing missile drone attacks across Ukraine hitting Russia as well in turn, and the US sort of throwing its hands in the air. And the question is, do they also just walk away entirely, or does Trump take that shift, as you say, and say, you know what, I'm going to dig in here and I'm going to put sanctions on Vladimir Putin? It's really unclear if he's prepared to do that.
Ros, even if there were sanctions applied, how effective could they be? What have we learned thus far about what happens next?
Well, this is an economy that's been on a war footing for years now. So it's shown its resilience to the wide-ranging sanctions that are already on from Europe, from the US, from G7 states and elsewhere. The economic squeeze has been on Russia consistently, and it's not stopped this war because he's shifted very much his production to a war footing inside Russia. That doesn't mean sanctions haven't hurt and they haven't forced Russia to find workarounds. Of course, we know there's talk from the EU about possibly adding to the list of banks that are banned from the SWIFT financial network, perhaps lowering the oil price cap for Russia, again, banning the Nord Stream pipeline. It would be about probably squeezing oil more than anything else. The question, as you say, is on top of all the sanctions that have been put in place already, does that compel Vladimir Putin to change course? Because nothing in the sanctions so far has seemingly done that. So you'd have to ask the question of whether further sanctions would do much in that regard to, make him change his mind and change course as a result.
Ros, great stuff. Thank you very much indeed for the updates. EMEA News Director here at Bloomberg, Ros Matheson. Let's talk about another story that we're focused on from a geopolitical point of view as well. Israel's military is now aiming, it says, to take over 75% of the Gaza Strip within 2 months. This according to local media accounts of a military briefing. The offensive aims to defeat Hamas or force the exile of its leadership. The press the group. to release the last of the hostages taken 2 years ago. We're joined now by Paul Wallace, who joins us now to talk about this. What do we know about this offensive? What do we know about this plan, Paul?
Hi, Guy. Well, this is very much in keeping with what Israel has been saying in the last 2 weeks, but this is giving us a bit more detail. They say they want 75% of Gaza to be under their military control in the next 2 months, and that's on the way to eventually controlling the whole of the Palestinian territory militarily. That's still 100% is still Israel's goal. So they're stepping up attacks, both ground attacks and airstrikes on the territory. That's causing civilian deaths to remain high, and the death count is rising. It's leading to more isolation of Israel on the international stage, and even the US seems to be getting frustrated by what's going on. And Donald Trump implied over the weekend that he wants this war over with quickly. And at the same time, Israel is trying to start this aid mechanism that it's been talking about in the last 2-3 weeks, but which international organizations, including the UN, have said won't work. But it's essentially to provide aid to civilians who have been moved to the south of Gaza. Israel thinks it can get the aid to civilians without Hamas getting control of it. But the likes of the UN said it's a very problematic system that they've come up with, and there's no guarantee it will work.
Paul, the Israelis are talking about 75%. They're talking about moving the Palestinians into very small areas of the Strip. How does that compare with what the reality on the ground is right now?
Well, the reality on the ground is pretty dire. If you listen to the UN, pretty much all aid agencies that have operations of some kind in Gaza. If you listen to Western European governments, including the UK, they say that the situation regarding supplies of food and medicines is very bad, and much more needs to be getting in to the territory. Israel had a block on aid from early March until about a week ago. Since then, some aid is going back in, but the UN says it's a drop in the ocean.
Paul, great stuff. Thank you very much indeed for the update on this dire situation. Bloomberg's Middle East and North Africa editor, Paul Wallace. Up next, Emmanuel Macron, the French president, is on a European tour. He's in Vietnam. We'll talk about what he can get from it. That's next. This is Bloomberg. Morning, welcome back. You're watching The Pulse. I'm Guy Johnson in London. Let's talk about your top stories this morning. President Trump extending the deadline for the European Union to face 50% tariffs after a phone call with Commission President Ursula von der Leyen. The delay lifts European stocks, all but wiping out Friday's losses. As you can see, we've completely round-tripped. In fact, on a two-day basis, we are now unchanged. Plus, President Trump says he's considering new sanctions on Russia, calling Vladimir Putin, quote, absolutely crazy after Moscow launched yet another night of deadly strikes across Ukraine. As I say, European markets basically completely round-tripping. There is nothing to see here, so we can look elsewhere. President Emmanuel Macron has vowed closer cooperation with Vietnam on defence, transport and nuclear energy after talks with the nation's leaders. He kicked off a tour of Southeast Asia there. He's going to continue. Bloomberg's Vietnam Bureau Chief Francesca Stevens joins us now from Hanoi. Francesca, talk us through the talks. What's been agreed? How significant are they?
Good afternoon, Guy. Well, Emmanuel Macron has been holding talks in Hanoi today, as you said, with the nation's top leaders, as he seeks to shore up allies in this region. Standing alongside Vietnam's president, he called for a world order based on law and promised to work with Vietnam to uphold international maritime law. He also said framework agreements were signed on several defense projects. Among the deals agreed, Vietnamese airline Vietjet announced it has doubled an order for Airbus A330 wide-body aircraft from 20 to 40 planes. Now, French and Vietnamese authorities also signed agreements on defense equipment, agriculture, satellite cooperation, nuclear energy, and transport infrastructure. And in addition to the business deals, Macron has been urged while he's here to raise human rights issues while in Vietnam and press for the release of dozens of civil society activists, although there's been no mention of that here so far. There's more talks happening this afternoon, and then tomorrow he's set to deliver a speech at the University of Science and Technology here in the capital about the future of France's relationship with its former colony.
This is part of a wider trip. Put this in the context of that wider trip. What is the wider trip aimed at achieving for the French president?
Yeah, Macron's trip follows on the heels of leaders from China, Japan, and other European nations visiting the region in recent weeks in a sign of Southeast Asia's growing strategic importance. Now, from Hanoi, Macron heads to Indonesia and then on to Singapore, where he'll give a speech at the Shangri-La Dialogue, Asia's largest defense forum. Macron is looking to bolster ties with the region after Donald Trump hit Vietnam, Indonesia, and others with some of his highest tariffs after China. And while they're on hold for now, efforts to diversify trade destinations could lead to a boost in EU trade ties. Now, this is all part of Macron's strategy to cast France as a top trade and security partner, according to a briefing from the Élysée Palace ahead of his trip. Paris wants to be seen as a partner that is reliable and respects sovereignty and independence. And the tour comes at a time when Southeast Asia is trapped between trade pressure from the US and an increasingly aggressive China, particularly when it comes to the contested waters of the South China Sea and competing territorial claims.
Francesca, thank you very much indeed. Bloomberg's Vietnam Bureau Chief, Francesca Stevens, on the French president's trip to Asia. Now, Southeast Asian leaders have started 2 days of talks seeking to deepen ties with China and Gulf nations and, of course, mitigate some of the fallout from US tariffs. Trade and economic cooperation will likely dominate the agenda of the 10-nation ASEAN summit, which is now taking place in Kuala Lumpur. We're joined now by Yun Liu, Asian economist at HSBC. Yun, thank you very much indeed for the time. Talk us through how ASEAN nations and their economic interrelationships are changing as a result of what Donald Trump is doing on tariffs.
Yeah, thank you very much for having me. So, this ASEAN summit, I think it very much sets a good example of how countries can cooperate in time, especially in times of unprecedented uncertainty here. So I think for ASEAN overall, it's very much a trading nation at heart, very much trading region at heart. And it really wants to take this opportunity to strengthen economic ties, not only within ASEAN, to boost the intra-ASEAN trade ties or investment ties here, but do not forget tomorrow we're also going to see, ASEAN GCC summit. We're also going to see the first ever ASEAN GCC China summit. So I think ASEAN really using this opportunity to diversify its, export destination and seeking new opportunities and especially, in regions of untapped potential here.
In terms of, is there a sense that some of these nations need to pick sides? And you need to go one way or the other?
Well, ASEAN always wants to be on good terms and good relationship with everyone. So, if we look at the trade data here, the U.S. really has been, one of the largest exporting destinations for a lot of the ASEAN countries. But if we look at the imports, obviously the importing destination is very important, for between China and ASEAN. So it's not only about, obviously, this challenging backdrop Europe obviously kind of accelerates that kind of urgency. But, I think for ASEAN, it really has been in ASEAN's DNA to try to diversify its exporting destination. A lot of the ASEAN countries like, Thailand and Malaysia are also trying to negotiate free trade agreements with Europe, trying to tap untapped opportunities with GCC countries here.
Yeah, just talk me through that relationship with the GCC. We obviously saw the President of the United States in the GCC recently. A big kind of focus on the relationship between the United States and that region. But the GCC has been looking to ASEAN countries a great deal recently. And I'm wondering with kind of what I should read into the inclusion of the GCC on the agenda.
Yeah, obviously, if we look at, the GCC relationship with ASEAN, I mean, in terms of the trade relationship, actually is not that kind of balanced one because most of the trade is dominated by ASEAN's imports. And a lot of the imports, a lion's shares of the imports, are actually energy imports from the GCC, which means that there is actually a lot more potential for ASEAN to sell its own products, to accelerate its exports to the region. But at the same time, if we look at the investment linkages, I think it's quite important because a lion's shares of the investment linkages between GCC and ASEAN is actually in portfolio inflows. It's not really in the so-called traditional sense of a foreign direct investment. So with ASEAN as very much a rising production hub in the world, I think there are quite a lot of opportunities for the two regions to discover.
In terms of the economic outlook, therefore, how would you characterize it? People are trying to figure out kind of what a more balanced portfolio should look like right now. And I appreciate that you're an economist on this, but in terms of the stability, the economic stability of this region, and therefore by extension, the opportunity of this region as a kind of diversifier, how should we be seeing it? What does the economic stability story look like?
Yeah, so I think ASEAN, I mean, if we look at the long-term story, there is a lot of great potential here. ASEAN as a very, as a large consumer market, with young population demographic dividends here. I believe that, that structural factors remain in ASEAN in the long term. But obviously in the near term, we are seeing quite a lot of the tariff uncertainty here. But I think it's quite important for ASEAN countries, for the policymakers this year to probably look within, to search within and see if there is any, sort of the domestic growth engine that, a lot of ASEAN countries can rely on. So we're probably talking about, private consumption. We're talking about, investment here. Maybe the private side of the investment is putting on a little bit of a cautious footing because of, the uncertainty here. But the public side of the investment, all these mega projects, infrastructure projects, ASEAN policymakers, really trying to revive this infrastructure playbook here. So I think for ASEAN in the near term, there's still good pockets of resilience.
Can I think about how do I think about Asia more broadly, Asian economies, ex-China? People are talking about looking at this region, but trying to be ex-China. And I'm wondering if that's possible, just because of the economic interconnectedness of the region, and whether or not that is actually something from an investment point of view that you realistically, considering the underlying economic connections, you can do.
Yeah, I mean, there is a great potential in this region, in ASEAN. So as I mentioned, on the production side, actually, ASEAN has possesses this, two very important supply chain here. One is maybe it's not too much a sort of, widely known story, but it is quite important if we look at the traditional sort of electronic supply chain here. If we look at the more promising, the emerging supply chain, which is the EV supply chain. But obviously on the expenditure side here, in terms of that potential to be a large consumer market, in terms of the demographic dividends, in terms of skilled labor force, I believe that there are a lot of good structured stories in ASEAN.
Great stuff. Yun, thank you very much indeed for your time today. Yun Liu, Asian economist at HSBC. Let's return to what is happening in Europe and shift our focus to what is happening with the European banking story. Banco BPM is seeking to block Italy's market regulator from delaying a proposed takeover of the bank by UniCredit. Bloomberg understands that Banco BPM filed a court appeal last week that is set to be heard on June the 10th. Italy's market regulator suspended UniCredit's ongoing tender offer for 30 days, giving Italy's second biggest bank more time to talk to the Italian government about restrictions that Rome has placed on the deal. That's what's happening in Italy. Complications there. Definitely complications in the banking sector in Spain. So let's go over to there now. BBVA is hoping that changes to EU legislation will make it easier for the Spanish bank to continue its takeover of its bid for Sabadell, despite opposition from the Spanish government. Madrid is currently assessing whether to subject the transaction to a review. A decision is expected tomorrow. For more, let's bring in Bloomberg's Rodrigo Orella to talk about what we can expect here. So, Rodrigo, what can we expect? What do we think is going to happen? What is this decision going to look like?
Well, the widespread expectation for tomorrow, when the economy minister has to announce its decision, is that it will ask for the broader review. It'll ask for an assessment in which the government can say, this is fine, it can go ahead, or no, these are the conditions I want to set because I don't like it. The government cannot block the deal per se. What it can do is block the legal merger, and it can put some stringent conditions on it. That will take about a month after tomorrow's announcement. So tomorrow, everybody expects the economy minister to ask for the broader review, and then we expect the government to wade in. What will the government do? The feeling out there is that it will probably, given what they have said so far, it will probably want to make this deal more complicated, put on harder conditions, because it does not like the deal. That has been the public position so far.
In terms, therefore, of how this is likely to progress, what are people seeing over the next few days and weeks?
So, as you were saying, there's obviously there's an attempt from BBVA to say, hey, this will work out because there are certain EU directives which play in our favor. Basically, what does that mean? It means that the EU has already made a decision on what governments and what regulators and what entities like the European Central Bank can say. And BBVA's interpretation of those directives is that the government in Spain cannot block it from doing this deal. The key here, though, is that directives from the EU have to be implemented as laws, and Spain has not implemented that as a law yet. So it still acts based on its own laws, not on what the EU says. BBVA says that doesn't matter. So BBVA's bet is that the EU will come to its rescue. What else can we expect? Sabadell is really pushing on this idea that we are a local bank, that we're near to the people on the street, we're near to small companies, and that's their trump card and what they're trying to lobby the government with. So far, they have the favor of a lot of industry groups, unions, and a lot of politicians across the aisle. So over the next month, we'll hear a lot of public vocal positioning and even vocal fighting, if you want, and then we'll see what the government says. We won't have a decision from the government till late July.
Okay, we're going to leave it there. Rodrigo, great stuff. Thank you very much indeed. Bloomberg's Spain Bureau Chief, Rodrigo Orella, joining us on the latest on the banking story. We're going to turn to central banking next. Neil Kashkari, president of the Minneapolis Federal Reserve, talking to Bloomberg about the uncertainty that is being created by President Trump's tariff policy. We'll have his comments next. This is Bloomberg.
The fundamentals of the economy coming into this year were absolutely strong. We had inflation that was trending down, not quite back to our 2%, running at about a 2.5% level, and GDP growth that continued to exceed our own expectations for the last few years. So those fundamentals were very strong. And now there's been policy uncertainty that has been introduced to it. And that's what's causing this environment that we're trying to navigate. A stagflationary shock, if Jamie Dimon is correct, pushes up inflation, pushes down economic activity. But our monetary policy instruments either push up economic activity and inflation or push them both down at the same time. And that's a particularly challenging environment for policymakers to navigate. And that's why so many of my colleagues and I are saying we're really in a wait-and-see mode until we see which of these two effects, activity or inflation, which is the bigger effect that ultimately should drive our policy path.
As it stands now, Neil, how would you rate the chances of a stagflation? 30%? 40%?
Well, I think there's no question that the shock of tariffs are stagflationary. The question is going to be, ultimately how high do they settle at? Right now, they're at a very high level, highest in 100 years. And how long a period both is this uncertain environment and how long are the tariffs going to last? If we have high tariffs for a month or two, but then they're negotiated much lower, the stagflationary imprint of that is going to be much, much lower. If we ultimately settle at a high rate for the foreseeable future, then the stagflationary impact will be much larger. And so is it stagflationary? Yes. But the question now is the magnitude of the stagflationary impulse, and we just don't know yet.
That was, of course, Neel Kashkari, Minneapolis Fed president, speaking to Bloomberg's Heslinda Armin a little earlier on today. Dollar's been under pressure as a result of the round trip we've seen on the tariff front from President Trump from Friday all the way through back into Monday. And the fact that basically nothing has changed elsewhere, I think, is highly significant too. Let's talk about all of this with Bloomberg macro strategist Ven Ram. Ven, Neel Kashkari says stagflation inevitable. It's just a magnitude issue. Are markets priced for even the slightest bit of stagflation at the moment? How are we positioned currently?
Well, if you look at the stock markets, U.S. stock markets, Guy, I don't think they even entertain the prospect of stagflation. If you look at the earnings per share, aggregate earnings per share on the S&P 500 last year, it was about $238. If you work out a 5% decline from there, that's a very mild decline, mind you, and that will take you to $225. And even if you slap on a liberal 20 times earnings on that, that would be about 4,500. So the markets are at 5,800 now. So the markets are not thinking this is stagflationary. The markets are prone to glossing over this, right? I mean, we have seen this movie play out before. Whether you look at the dot-com bubble, whether you look at the great financial crisis, the markets are always quick to rebound, and the people who buy into the rebound are the ones that get eventually burned. And that is my concern here, that the markets are not pricing stagflation, least of all the US stock markets.
When does the penny drop?
I think that the penny will drop in the third quarter and the fourth quarter, Guy, because if you look at the Fed Atlanta GDP nowcast, it's kind of saying that, we were in a contraction in the first quarter, but perhaps not in the second quarter. But if you look at the economics forecasts for the third quarter and the fourth quarter, they are all already well below 1%. So all it requires is a bit more of a mild shock. And as the real economic numbers start trickling in, I think we will start to see that effect. So the penny will drop, I think, in the third and the fourth quarter. But second quarter is not going to be very good for stocks either.
How much will the Fed be able to do at that point? Kashkari's talking about stagflation. That implies that we are going to see sticky inflation as part of the mix. So how much will the Fed be able to deliver at that point? There's this kind of constant commentary that I get that the Fed won't do anything until it knows what's going on. But when it knows what's going on, it will act very decisively. Is that still the base case?
I think that is still the base case. And I think that, at the moment, the balance of risks between, unemployment and inflation is kind of in balance. So the Fed is happy not to do anything. But the thing is, once the penny starts to drop, as you mentioned, Guy, I think that's when the Fed will act decisively, and they will act decisively to shore up employment. At that point, it's not going to be inflation that's the concern, because inflation is often a lagging indicator. So they are going to go and front run the economy. That'll mean that we can still get 2 rate cuts this year.
But is the Fed going to be late? Are those two going to become late? Because at the moment the Fed is waiting. It wants to see evidence. Normally you would hope that in some ways that the Fed would act before you start to see the real pain being felt. But do we need to see the pain before the Fed acts? Is that the way it's going to work this time? And therefore, by definition, won't the Fed be late?
Yes, the Fed is going to be late, and by definition, they're going to be behind the curve, because, the Fed is not going to, this is a very complicated situation where at the same time you've got inflationary embers, and at the same time you've got, downside factors weighing the economy. So at the moment, the Fed wants to play it safe. They don't know which way the penny will fall. So I think that they are going to wait, and that wait means that they're going to be behind the curve. And I think that the way it's going to play out, as I said, is that the economy is going to weaken sharply in the third and the fourth quarters, and the Fed will act to cut rates then.
OK, Ben, we're going to wait, we're going to watch, we're going to wait until the third or the fourth quarter, but we're certainly going to have to do that. MLive strategist Ben Rahm. Let's turn our attention to some of the other events that we're going to be watching so carefully this week. Nvidia numbers are out, and there's some interesting stories floating around about Nvidia before we get to those numbers. Reuters is reporting that the company is set to launch a cheaper version of its Blackwell AI chips for the Chinese market. The report says the chip will have different specifications compared to the high-end version, with mass production expected as early as June. I'm joined now by Robert Lee, senior analyst at Bloomberg Intelligence. Robert, is this possible? And how would the Trump administration react if it is possible?
Yes, two very good questions, especially the last one. I think it is credible, it is possible. Jensen Huang appeared at a major tech conference, Computex, in Taiwan last week. He stood up and I think for the second time in the same number of weeks, talked about a potential 50 billion opportunity that he foresaw in China. So obviously, since the banning of the previous version of the AI accelerator going into China, the H20 chip, the market's been effectively cut off to them. So clearly, Nvidia are looking at all possible ways to try and re-enter the market. But as you said in your question, it has to be agreeable to the White House and the Trump administration. If this story is to be believed, this new variant of chip would be a further sort of throttled back version based on the H20, not using high bandwidth memory, using far lower specs. But the $50 million question, or I should say the $50 billion question, is really, will the Trump administration agree to it? That's what we don't know.
Yep. How is all of this going to fold into the numbers this week? Because presumably Nvidia has been throttled back in China. Is that going to show up in the figures that we are going to see, Wednesday in the United States?
Yeah, well, the company already confirmed it had written off some 5 or so billion of inventory related to the H20 ban. So I guess that's a known and already baked into numbers. But clearly, it's a two-horse race in global AI at the moment between the US and China. And China is a substantial market opportunity. And this sort of argument applies to many US firms out there. I mean, for example, not picking on Intel, but Intel's chips dominate the PC market, whether it's laptops or desktops. Then you look at Microsoft, again, their software dominates the software market for PCs. So I guess the issue for the Trump administration at the moment, whilst they want to forestall the efforts of Chinese companies on the AI front, China's still a 1.4 billion population market and a huge opportunity for many existing tech platforms. So it's getting that balance right, making sure that American companies can appropriately address and take advantage of the opportunities within the massive market within China, but at the same time, on the geopolitical front, trying to play things carefully on that. So it's a very difficult balancing act, I think, for the administration at the moment. We'll see how it plays out.
Oh, yeah, we're going to watch this one very carefully. Robert, thank you very much indeed for the analysis. Robert Lee, senior analyst at Bloomberg Intelligence. That pretty much wraps things up. Obviously, we do have Nvidia numbers. They're going to be coming through Wednesday. We're going to have some great coverage of that. Coverage of these markets, albeit curtailed markets today, will continue next. Hope you enjoyed the show. This is Bloomberg.